Hey, what's up, guys? So I wanted to do a really quick supply and demand video, and this is really the way that I look at trading. I have some books that I told you guys to read, and that will help you out with this. But once I understood this concept, I started seeing how supply and demand and volume is really all you really need. You can go out and buy subscriptions to whatever you guys want, but at the end of the day, this is literally all I need to trade. And so, to how to understand the concept, supply is going to be what when the stock is going up. There's going to be supply that weighs the stock down and makes it drop, right? So what we're doing as short sellers, we're waiting for a stock to shoot up, go into a supply zone, and start to fail. And ideally, that supply zone is going to be the golden zone. Since you guys are doing gap and grab, that's what I wanted to focus on. One thing that you guys need to look for, though, is demand zones. And the way that I want to kind of think about this is exactly the opposite. Say that this is our first target. Okay, well, say you got in the trade up here in the golden zone, and it chops around, and then it fails to your first target, and you cover half at the first target or full, depending on how much size you're trading with and what area of or what stage you are in your trading. But ideally, talking to slightly more experienced guys that are going to be trading with a little bit more size, you cover half, right? Well, a lot of times this can either consolidate and do a second push, or another place that this is very common at is the second target. And you start watching different zones, and I feel like a better way to explain this will be on a live thing. So I'm going to make this a little bit smaller. So so this is where the stock is coming off from, right? This is clearly a demand zone. Why? Because demand makes the stock move up. Okay, well then it found its first supply zone right in there. Okay, well, this thing's up from $2 and it finds a top in at 320. Yeah, hell yeah, that's good enough fade for me. But the problem is the demand zone moved up, and now it's curling, consolidating, and then pushes. You start learning timing and what times are significant in trading, and 8 o'clock is a very good time. That's a lot of volume comes in at 8 o'clock. Thing gaps up at 8. There's stocks to gap up. There's 4 o'clocks. There's some guys that trade in London, and that's like their bread and butter. They wait for a gap to a stock to gap up at 4 o'clock. They hit it with size, and they're literally done trading. By like 6 a.m. our time. But I have some buddies that trade at 7. There's moves at 8. You start learning how this works. But when the demand overtakes the supply, look what happens. The supply becomes a new demand. What used to be a ceiling now becomes a floor. It's like if you go into your house. That's why I use the floor and ceiling analogy. You go into a house, say you're at ground floor. Cool, that's great. Then you walk up the stairs, and now you're on the second floor. Okay, well, you come down. Okay, well, now what used to be the ceiling is now the floor. And that's not always the case, but that can definitely be something that happens. And in this case, this is going to be the new floor. Okay, well, hell, now it's got a third floor. Now it's on the third tier, and it's moving up. Every time this starts moving up, you start looking at different zones. Okay, like this is a very, very small zone at the very beginning, but look how it reacts. It wasn't huge, but it had decent volume, right? This thing pops up. Okay, support. Okay, lower high, right? Because this found a supply zone. Can't go up high enough. There isn't enough demand to make this go back into this area. It goes back down, bounces around demand. Okay, can't go any higher, and then right before the open, look at the volume coming in. Okay, well there you go. Now, I know I'm making a lot of drawings on here. Now we got a new little demand, and that's part of the game. And for me, this sets a high in pre-market right before the open. This is literally 4 minutes before the open, but still at the end of the day, actually, I want to keep. Hopefully this isn't too busy. I can always remake this video if it is, but this doesn't have the golden zone on it because it's not the day. The golden zone only works on the day this thing gapped up. Since this happened a few days ago, you have to draw on your own. That's why you draw in, you go to Fibonacci retracement, and if you're on DOS, it's called Fibonacci line, and you're going to do the exact opposite if you have the Fibonacci line. But on Thinkorswim, you're going to go from the very top and then to the bottom. Like, so here is the bottom. So like right before open, I'd be looking for this. Right, I need this zone up in here to be hit, risking off of this high. It doesn't work, and then it breaks through this level. Well, the problem with this is when it breaks through the level, I have to adjust. So that's the new level. Does it get to my zone? No. Then it breaks it again. Okay, there's my level. Okay, does it get there? It really depends on how this candle opens, right? Because if I put it here, it does. I would have met. I really have no idea. What the price action of this stock was. This might have gave you a setup, maybe. If it didn't, it gave you a setup right here. And what's even better is, I feel like it gives you a couple different options. So it goes there, breaks again, goes down again, goes down again, and then for sure, 100%, it gives you an entry right here. So say you are a brand new trader and you are just trading with 100 shares. Okay, cool. That would be your trade. That would be your gap and crap trade right there at $4.27, risking $4.55. You would cover right here, and you would get 360. So what is that, 67 cents? So $67. I mean, that's not too damn bad for working 10 minutes, but it also takes time to start learning how to do this. But if you start looking at this stuff, this was a supply zone, broke through, did a fake break, then that's when the volume really starts coming in. They dump it back down, and then look what happens again. More supply zone. And then it drops down again. Then it goes down to this old demand zone. It wicks up right here, pops back up right into the supply zone, and then it tanks back down, and then it tanks back down to this demand zone, and and then pops back up, and then this rejects this old demand zone. And like that's literally what you guys need to be doing, going back and forth over and over and over, and start seeing how the stock goes. Because at the very beginning, when people start trading stocks, they're like, they think that the stock's just going to go straight up. They have no idea that you can make money when the stock goes down. And then they learn that the stock. This is at least my personal story. Then they learn the stock goes down, and they're like, "Oh, dude, this thing's just going to go up and then down." No, it's not. It's gonna go up, consolidate, up, consolidate, up, consolidate, up, and then tank, consolidate, maybe pop a little bit, tank, consolidate, up a little bit, tank. All this is like this is the way that I look at it. All this is emotion, right? These guys that are buying here are filled with greed. Why? Because the stock is up from $1.89. They don't want to miss out on this amazing news, whatever the hell this was. Then it starts going down. They start freaking out, and now they start selling, and then they're selling right into the big hands buying, and then the big hands. Okay, well, we collected some more. All right, let's get some more. They push back up. And then these guys that sold over here are going, oh shit. Yeah, maybe they start buying back in again up here. You know, then it breaks through the level. Okay, cool. Well, you're definitely going to have some people buying here, right? Or short sellers that are shorting here. It's consolidating, though. It doesn't have the right chart pattern. And also, it squeezes up. Well, now, these short sellers to get in right here, when you cover your short sell, you then are going to be a buyer, and you fuel. It's like adding jet fuel to a fire. It's just going to shoot up. That's why it's very, very important that when you guys first start trading stocks, you understand first the idea of what the stock market is, how to understand supply and demand, but then also start looking for clear stuff. You know, like I said, Fibonacci for me is a very, very good, you know, thing. Like it goes from the high to the low. Okay, cool. Well, I would take a trade in here, risking off of here. When it starts coming down, though, I start seeing this kind of pattern of low volume accumulation. You know, for me personally, I'm gonna stop out, break even, especially when I'm up from 288 to 238. That 50 cents. You're up 50 cents, and yeah, your first target hasn't hit yet. You know, I'm getting off topic because that's getting a little bit more advanced. You guys don't need to worry about that. But like, what you guys can do on your free time is just go in and start marking up charts. Okay, there's a demand. There's a supply zone. 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 Holy shit, this turned into the same supply zone. Depending on how you draw this in, because down here is a support zone. Support ends up turning into resistance. Right there, you start figuring out how the game is played, and that's going to really help you guys out a ton, I feel like. And it's something that you guys don't have to spend any money on. Well, as long as you guys are in America. If you're in America, you can open up a Thinkorswim for like $5. Okay, go. Just have fun, And I don't know, just mark up charts and start seeing how these stocks typically move, and it's going to just help you out a lot more once you start doing, first off paper trading, and then when you start with your live account with small size, it's going to help you build your account up. So I'll see you guys in the next video.